Good morning and welcome to Ladies of Crypto on Martyn Lucas Investor. First, I want to just apologize for the delay. I had a little bit of technical difficulties, but welcome back if this is if you were here last week, and welcome if this is your first time. So last week we talked about behavioral traits of investing. And we talked about being the richest woman in Babylon with 7 money behavioral rules. This week, we're going to get a little bit more into how money works, why it feels broken, and how crypto fits in without fear. Okay. And I can see the chat today. So I'm just going to check out who's here. Hi, Bernice and Josh. Potato family. Hello. Human being Liz and Vaz. Thanks for updating everyone, Vaz. I appreciate it. Ricardo and Craig and Kazan. Let's see. Okay, so we're going to get started today with how money works and why it feels broken and how crypto fits. Okay, so I want to start by saying something very important because some of you may already feel this a little bit. If the economy feels off, if the headlines don't match real life and what you're feeling, and if you're doing everything right and still feel like you're running just to stay in place, you're not crazy. So drop "not crazy" in the chat if you know what I'm talking about. Okay. And let's see, XRP Army General, hi. See you in the chat. Okay, so this episode is clarity. This is not hype or fear. We're just going to talk about clarity because we want to know what system we're already living in. That helps us understand why crypto, why now, and what we can do to kind of break free of the traditional system. So the last episode, like I said, we talked about behavior before strategy. Let's see. So money is behavior before it's a strategy, especially for women, because they handle money differently. They think long term, and before they ever want to invest, they need a longer term strategy. We talked about paying yourself first last week. We talked about protecting your money, and we talked about thinking long term. And a lot of men think long term too, but they tend to make decisions that are that help them jump on opportunities. They typically make decisions faster and can see opportunities faster. And so I believe that when you combine those two strengths, the long-term thinking and strategy and the short-term risk-taking and opportunity seeking, that is what creates real wealth. Okay. So today is the system those rules live inside. Because here's the uncomfortable truth. You can have perfect habits and still struggle if the system itself is distorted. So let's start simple. Okay, money is not wealth. Money is a tool that measures and moves value. It helps us store value, measure value, and move value. Let's see. And today, money is not printed. Most money is typed into a computer. If you've ever thought, wait, they can just create money that way, type wait. Put it in the chat. So when you put money into a bank, most people imagine there's a little envelope with your name on it in a storage vault, and everything is just sitting there waiting for you. It has a cubby with your name on it. That's not what's happening. Your bank account is not a vault, it's a ledger entry. And you're the silent partner. You fund the system, you don't control it. The bank uses your money, it lends it out, it multiplies it, and it earns interest. You're the bank's cheapest source of capital. This is a centralized system. One record keeper, one version of the truth. So let's see. Okay, just if you understand what I've said so far, type ledger in the chat. If this also just changed how you view banks. Okay, now let's talk about the number that explains almost everything. $9 trillion. That was the peak size of the Federal Reserve's balance sheet. They control the price of money. The problem isn't the number. The problem is how it got there and why it can't really go back down. Interest rates are simply the price of money. When rates go up, life gets expensive. And remember rule number 4 from episode 1, protect your money. In 2008, the system nearly collapsed. The Fed stepped in with an emergency measure called quantitative easing, and the promise was simple. This is temporary. It wasn't. By 2013, the crisis was over. The crisis was over, but the money didn't stop. Because that's 2008 changed everything. Emergency measures became permanent. Okay. When the Fed hinted at slowing down, markets panicked. The patient wasn't healed, it was addicted. This is where blockchain comes in. The big question is, what if we didn't trust one ledger? Blockchain is a distributed record keeping. Instead of one ledger, everyone has a copy. It's a shared ledger, and it doesn't have one single editor. It's like a shared Google Doc where everybody sees the same page, and it takes consensus to edit it. Each block locks the one before it in a blockchain. Change one page and everything breaks. Okay, so centralized versus decentralized looks like this. Centralization is one person holding the remote control. Decentralization is a group agreement. Yes, we're still watching Yellowstone, probably, if everybody has to agree on a show, but basically, it is a distributed ledger, and you can only make changes to that ledger if there is a consensus among everyone. And if you make changes early on, it breaks the entire chain going forward. Every one of those chains also contains the information and data from the chain, every one of those blocks also contains the information and data from the block before. So centralization is one person holding the remote versus a consensus of everybody agrees. So why crypto exists? Can value move without permission? That's a question. Crypto didn't start as an investment. It started as a question. Can value move without permission? No middleman. Now let's remove the fear. This crypto basically was created in response to what happened in 2008. Blockchain existed before that, but in 2009, Bitcoin, a white paper on Bitcoin, was released by a person or a group, we're not sure, named Satoshi Nakamoto. And that, I believe, was trying to find a different way to break out of this system that has controlled our money. So this means individual ownership in our assets that nobody else can lend out, that nobody else can make money on, that nobody else can charge fees on. It's your investment. It's your asset. It's your money. Okay. So I'm going to take a little break here and look at the chat and see how you guys are doing. Let's see. Let me go back up here. XRP Army, yes, the fiat system is the biggest Ponzi scheme in history. I would agree with you. And then High Energy Investments says, I like making 3.5% on my USDC. Yep. It's a safe bet. Okay. Entrepreneur for Life 28, you are on it, sis. Love the information. A lot of people need to hear this info. I'm going to proudly share. Thank you so much, Entrepreneur for Life. Okay, and M. Rayleon says hello and hello, everybody. Okay, let's get back to this and then I'll revisit the chat in a few minutes here. Okay, we're going to talk about wallets. Wallets are where you hold your crypto, and wallets hold keys, not coins. Transactions are direct, permanent, and verified. Crypto is digital cash with receipts. None of the trust me or giving blind trust to an institution or group of institutions that really, have complete control. Okay. So wallets are where you store your crypto. And the ownership is, you have ownership because of the keys control that ownership. Transactions are direct, permanent, and verified. And it is like digital cash with receipts. So safety comes from the rules when it's with security. It's based on math and group consensus. Okay, so now women don't fear risk. We fear unmanaged risk. Crypto needs long-term thinking, risk awareness, and systems literacy. Balance, strategy plus action equals wealth. Okay, so today we were just doing a brief overview, but now I just want to look at the chat and have a conversation about what it is that you're looking for. Have you already invested in crypto? So let me know in the chat if you've already invested in cryptocurrency, what kind of information you're looking to learn here. And I want to talk about this because last week and this week we were laying the foundations, what the system looks like, why crypto exists, which is really trying to exit a system that has controlled us for way too long. And in the coming episodes, we're going to get into the nitty-gritty details of how to even start, what you should start with, how to keep yourself safe, what exchange should you use, Now, I'm not ever going to tell you what exchange to use, but I can tell you what's out there and I will give you advice as far as what I use. You can take it or leave it, but we're going to talk about how much do you start with? What cryptocurrencies do you even invest in? So let me look at the chat now and see. Okay. I'm scrolling back up. Okay, Terry Rose says, the sad thing is schools don't teach financial literacy. I had to get my BS in consumer econ at university to learn what every kid should know. And I completely agree. I have 3 kids all in college right now, and they are not taught financial literacy, not in grade school, in high school, or in college. We try to teach them that at home. But this is information that everyone really needs to know, because before you even start trying to invest, you've got to figure out how to get above water. We're just trying to learn how money works. Okay. And I see Martyn put in here to sign up for Sensei's newsletter. I will tell you, it is incredible. Before I became a broadcaster, I've been following Sensei for a long time now and reading the newsletter. It has such incredibly good information. So that if you haven't subscribed to it already, the link is in the chat. And High Energy Investments made some money on ICP yesterday. Fantastic. Scared money don't make money. Some schools teach, this is from Ricardo, some schools teach the minimum on financial literacy, but 16 to 18-year-olds are focused on other things. My freshman year, we were taught about writing checks and doing your own taxes. And that's the thing with financial education, even when it is provided, right? I mean, what we're taught is things like how to balance a checkbook, but rarely are people taught, unless you're specifically studying finance or economics, rarely are people taught how this money system works, that we actually don't own our own money. When we put it in the bank, there's a small amount that is on reserve, and the rest is lended out. And here's another part that I didn't talk about earlier. Let's say that you put $100 into the bank, and then that bank loans $90 of that 100. Let's say they loan it to somebody for, I don't know, a car loan. And that person deposits that money into another bank so that they can pay for the car loan. Or it goes directly to the receiver, whoever they're buying the car from. It goes directly into their bank account. What happens is another entry is made into the ledger. So that's how banks are creating money. It looks like another asset. And when that debt is paid off, that asset disappears. So in general, banks don't really want debt paid off because their balance sheets are bigger when the debt is not paid off. Okay. Half the class was asleep and the other half forgot about it by the end of the year. Yeah, I could see that, Ricardo. Must have been super boring. It is important to learn how to balance a checkbook, but a degree in econ, I wouldn't think that would be what they should be teaching. Let's see. I grew up watching Fight Back with David Horowitz. That's Terry Rose 4804. I don't know what that is. I will have to look that up. And Maz TYD1C, welcome to Bronze. You're going to love it. You're going to love the membership. Human Being Liz. Oh, I lost it. There you are. Okay. The point of a wallet is still not easy for me. Every country has its own rules as well. Let's say, yes. So we'll dive in a little bit to wallets right now. Wallets are, like I said, they store keys, not necessarily your coins in general. But they are your that they are your ownership. That's what's recorded on the blockchain. Um, there are hot wallets. Hot wallets are different services that are offered online where you have online access to your wallets. And then there are cold wallets. Most cold wallets look like a little external hard drive, and you have keys and you can store them off of the internet, and they are the safest way to store your crypto. For me personally, I store a large portion of my cryptocurrency on a cold wallet. And then if I want to trade it, I will transfer it back to an exchange and sell it there. But that's really my long-term holdings. For short-term holdings, things that I want to trade within, say, the next few weeks, I do keep that on an exchange because it just gives me access to moving in and out of the market faster. Okay. And if you don't have a wallet at all, you can store it on an exchange, but that's a whole other show because there are security risks for keeping your crypto in the exchange permanently. Okay. Thanks, Martyn. Thanks for the support and love, Martyn. High Energy Investments. I'm heavily invested in crypto. I would love to know what your number one holding is. Okay. Yes, invested in crypto. Good job, Casey. Paul D. 8168. Keep up the goodest work. Thank you. Okay. And then XRP Army says they've been in crypto since 2017. Got FOMO at the top, as many did, but was a very good lesson. Let's see. Been here ever since through many bull and bear runs. I'm glad that you said that, that you got FOMO at the top. I just looked back at 2025 this week and realized that I was pretty much in the green all year. I was using my long-term strategy. I was buying at the right dips, not every dip, but I was buying when the market was panicking, and I was kind of re-entering positions. And then I got FOMO. I got FOMO when everything really started to go up. And the mistake that I made was, instead of taking profit at that point, especially in XRP. XRP is my largest crypto holding. I also Bitcoin and Ethereum, and I have some other things, but I would recommend staying in the top 3 if you're just starting. But with XRP, I did not take profit. And what I realized is that even though I talk about not buying into the hype, I'm still learning also. And I did buy into the XRP hype. And I realized I didn't sell my XRP because I was afraid that I would miss out on it going to $100, going to 10, going to 100, going to 1,000 overnight. I do absolutely believe that that is possible in the future. I believe that there are huge things coming for XRP, and it's going to do wonderful. But I looked back at all of the missed opportunity I had to sell high and then buy back low. So now the strategy that I'm using is that I have a portion of my XRP that I have set aside for the shorter term trading. And then I have a portion set aside that I am holding on to, that I'm hoping it is a very long-term investment, and I'm hoping that it'll go up fast. Okay. Let's see. David Hensley, I don't know what all you newbies are talking about. I've been trading crypto since the late 90s. Fantastic. I don't know how that's possible when Bitcoin just came out in 2009, but good for you. I'm glad that you figured that out. And Robert Elliott. Thank you so much for the super chat. And he said, "Good job, Casey. Thank you, thank you, thank you." Let's see. Very cool, Paul. This really helps KC. Yes. Thank you for thanking Paul Martyn. Okay. Good morning, William Myers, 333. And it looks like human being Liz, hi Liz, has been invested since last summer in crypto. So pretty new to it all. Hey, you're learning and you're getting started. That's what's important, right? Okay. J Costate, reaching out to a mind and not informed decision. Hope this channel will gain traction. That is the goal. That is the goal. High energy investments. Growing up, I was always told my friends and family and I should go get my Series 7, which you never hear about these days. I started learning from Meet Kevin in 2020 and learning from him and others. Okay, and then Liz, again, yes, I talk about cold wallets. It's not an easy topic. They give us more and more in the news in Europe and might well be forbidden. I'll wait for the next period. Thanks, Casey. Great. Let's see. Slim. I'm butchering these names, guys. I'm so sorry. I'm trying those. Slim MW or Willick. Slim M. Willick. Yes, invested in crypto. Love my Tangem. Oh, I love my my Treasure, and Tangem is also fantastic. That's from Janie Rasmus 7522. Yes, I use Treasure, but Tangem is also a really great option. Okay, I don't know what. Oh, okay, I read that. Let's see. High energy investments, XRP. Yes, XRP Army here is your biggest position. H bar, XLM, ADA in that order. Lovely. Small positions. I actually have small positions in all of those. So wonderful. Good for you. Doing good, Casey. Thanks, David Hensley. Let's Paul D, XRP, a few other Binky Bunk coins here. Great. I only have one Binky Bunk coin, and that was the other one that I made a mistake on because I made quite a bit on that and I did take profit, just I probably didn't take enough profit, and now it's going to be a while before liquidity cycles back into that coin. Okay. Thank you, High Energy Investments. It is a lot smoother. I made some mistakes last week. I'm sure I'm making mistakes this week. I'm learning all of this and I'm learning it along with you. So I appreciate you guys showing up and being here for me. I've really enjoyed talking to all of you in the chat over the last year on Martyn's show, and it'll get smoother as I go. So thank you for that. Zach Site, I'm enjoying your show so much. The best show this year on YouTube. So smart, not crazy. Thank you. You're amazing, Zach. That was a $20 super chat. I appreciate that so much. Thank you. Thank you. And that was huge support, Martyn. I appreciate it. That's amazing. David Hensley, I'm learning trading at the Learning School for Traders. Okay. Steam 1081. I always take profits when I buy a stock, but mostly I buy oil. Play the volatility in oil, small profits in and out quickly, more trades per year. Very smart. Everybody has their own way of investing and doing things, and you don't have to be in crypto to be a successful trader. The reason that I got into crypto, I had several reasons, but one of the biggest reasons is because blockchain technology has rapidly developed in the last several years. We have a supportive crypto administration in the United States. There is a lot more activity and clarity around crypto in the world. And so for me, it was a smart long-term investment because blockchain is expanding into so many different things, not just cryptocurrencies, but into medical records, into titles in real estate. I think it's an amazing technology, and I think that that is the future. So I also think that it could be a really big solution for the trap that we're in now, because right now we live in a monetary system based on debt, and debt keeps banks in business. So that's a personal opinion. I respect anyone who has a different opinion, but I think that there's just such huge opportunity in crypto. I always take profits when I buy a stock. This is Steam 1081. But mostly I buy oil. Okay, that's the one I just read. And oil is a great investment. Yeah. Okay. Treasure and Bitbox is on my focus as wallets, maybe. Great, Liz. That's wonderful. I want to see if they're. I was buying. This is Revved Up Biker. Hello. Good to see you. I was buying in and out of XRP last cycle at around £1. Panic selling lost me a lot of money. I started winning when I saw everyone else crying and buying big. 2022 bought 10,000 more for XRP for 26 pence. That's amazing. Great. You are really set up with XRP, and yeah, having the patience to hold on to it when everybody is panicking. I mean, that's I did not make that mistake, but I did make the mistake of not selling and taking profits and moving in and out of XRP, but never sell at the bottom. At that point, hold on. Unless it's an investment that you just need to cut your losses on. If it's not XRP, like I've definitely considered on my Binky Bunk coin cutting my losses. I'm going to give it a little bit more time and see what I'm going to do. I'm embarrassed to say I hold Shiba, high energy investments. Nice. I hold a little Shiba. I am right now in a position where I'm trying to get out of all the dumb coins that I got into in the beginning, because I made the mistake of not rotating through the cycles, because usually how that happens is the top 2 or 3 cryptos take off, and then things cycle into like mid-level market cap coins, and then once those hit highs, they trickle into the Binky Bunk coins. That's usually how it works, especially for ones that have been around for a while. Okay. XRP, Army General, you was doing so well, high energy, all those ISO assets will do well. I agree. They're probably my biggest position, but I'd swap Shiba for XDC, ridiculously more utility and value. Casey, do you own XDC? I do not own XDC. I did, and I took some profit on it, and then I exited when XRP was really, really low and just rotated into XRP. I was looking for a position where I could exit in profit, and then I do plan to rotate back into it once I've made money on my larger holdings. Paul D, biggest reason, honestly, I got into crypto is because of Canada locking down bank accounts with the truckers. Figured if it can happen there, 100%, if it can happen there, it can happen anywhere. Centralized banking in general has so much control and power. And for me, what I'm actually studying right now and trying to learn more about is like, what is the solution to that, right? If we're going to get rid of centralized banking, which would be a nightmare in a lot of ways, how are we going to replace it? And what I've come up with is that the new system will need to integrate cryptocurrency, faster payment rails, less expensive, individual ownership. We're going to have to combine the two because banks are still going to need to move money globally at a governmental level, right? So we can't just burn the whole thing down immediately without there being some fallback on us. Okay, sorry, I went off on a tangent there. Let's get back to this. Beachfront Java YT. Hello, Casey. So great to see a fellow lady in crypto. So great to see you too. I appreciate you. Thank you for the support. And then Janie Erasmus made money on Silver Boom, waiting for XRP and H bar to boom. That's great. I think H bar is coming. I think we're going to see a move in that. Okay, you've got my attention. This is Kazan Sky 66. I want to understand crypto, and this looks like the way. Wonderful. Well, we are going to be really diving into a lot of crypto specifically. We just, like I said last week, we laid the foundation of our money behaviors. And this week we looked at the behavior of the system that we live in. And then next week we can start really diving into crypto. My dumb coin, this is Revved Up Biker, is LUNC. Lesson learned, don't chase hype. Okay. So one of the coins that I bought into, and honestly, I still have such high hopes for this crypto, was Toshi. And last year, they did a lot of work. They added utility to this coin. It has an incredible community. I am not telling you to go out and buy this now, by the way, but what I am saying is it has a top-notch community that has really worked hard to give it some utility. It's kind of not just a meme coin anymore. And then last year, it was the first base coin, meme coin, listed on Coinbase, and was really being promoted as the face of base. It is named after Brian Armstrong's cat from Coinbase. So it has a lot of support. And anyway, that's the one I'm still holding on to. Okay. And then Sheila Trainer, hi, another informative show. Thank you. And then Terry Rose, this is the way. Okay, guys. So thank you so much for joining me this week. I think that we've kind of gotten through, if nobody has any more questions, we've gotten through the chat. And next week, we're really going to dive into crypto. So if there's no more questions, I'm going to say goodbye. Oh, wait, high energy investment. I made money on Toshi and Turbo. Good for you. Great. Toshi, I just love Toshi. I don't even really like cats in real life. I don't love them. I don't dislike any animal, but I don't love them. But I love that little blue cat. So I'm still holding on to it. Okay, well, thank you so much for joining me this week. I appreciate you spending your time with me, and I will see you again next week. So, let's see. Sorry, before we go, I just wanted to say until next time, take care of yourselves and each other and your ledger.